What do you make of what TL had to say?
Well, I put my risk manager hat on, and I think about where exactly the pain would be. Where's the outsized risk? Where has everyone been overtly bullish? Those would be the assets that I look at. So I look at energy. I look at what crude oil is doing. I look at natural gas. I actually look at cryptocurrencies. I'm studying what that is doing. I'm looking at the value trade, whether it's the casinos or the airlines, because I think ultimately it would be more reflective of the type of internal rotation that we've experienced throughout the year. I don't think it would be a broad-based overall equity index sell-off. I think it's more specific to where the money has actually been and where there is extreme bullishness. That's what you have to identify in the terms of what your risk might be looking forward.
You know, we thought we were going to have, Steve Weiss, this pullback that, you know, what, the S&P pulled back a couple of months ago at 5%. And then we had this resurgence, and the bulls grabbed the narrative back. And then they had seasonality on their side, too. And now I'm just wondering how you see things in light of what Tom Lee and his chief technical strategist are saying.
Well, I think there are two audiences for what Tom says, and he's been absolutely dead right on the market. The first audience is that shouldn't listen, and those are the ones that are staying invested that don't have cash. And the reason they shouldn't listen is because the market pulled back at any point in time 3 to 5%, and that's essentially what they're saying, before moving higher. However, where it does have value is if you're sitting in cash and you're saying, wait, I may get an opportunity to buy here. But again, that's if you buy markets. I buy stocks. Most people on the show buy stocks. So I'm tending to look at the bottoms-up fundamentals. In my view, in terms of the overall market, since that's your question, though, here's what I'd say. I'd say that, look, there is tons of optimism in the market. We keep seeing it reset every day. Even today, Tom continued to be optimistic while being careful not to disagree with his technical strategist. They come at it different ways. I think the market can move higher post-Thanksgiving. However, here's the biggest caution. The biggest caution is on December 10th, we get CPI. On December 14th, we get PPI. Those could be very destabilizing numbers for the market.
I guess,
if they continue to do what we saw.
Look what happened last time. You had the hottest CPI in 30 years. The market, all but yawned. I mean, you know, right? The Dow was down, I don't know, 0.8% at the worst, and the S&P went down 0.6%. And then it rallied right back.
And I'll tell you why that is. It rallied because you had a massive short interest in the 10-year and even in the longer end of the curve, but primarily in the shorter end of the curve. And when they didn't get the response that they thought they'd get from those inflation numbers, they covered, taking 10-year yield down to 1.45. Now we're seeing it move up. My bet is you won't see that kind of reaction if we get those inflation numbers again, and there's no reason to expect that we won't with all the news we're hearing from CEOs. So I'd be very cautious going into the market in terms of year end, in terms of the first, second week in December.